And the Pennsylvania Leadership Conference continues. We're about to go into a very important panel discussion that should be of concern to every Pennsylvanian because it's your money that's at stake. But just a reminder, you are watching the 2020 Pennsylvania Leadership Conference. And still to come today, we have a very long agenda, and it's also very exciting because after we have our panel on the state budget, we are going to be joined here live at the ballroom of the Radisson Penn Harris Convention Center in Camp Hill by U.S. Representative Scott Perry. After that, we are going to have a Skype interview with John Fund, who is a longtime friend of the Pennsylvania Leadership Conference, joining us from New York City. We are going to have a video presentation from our U.S. Senator, Pat Toomey, and then David Taylor is going to have a conversation with Pennsylvania House Speaker Brian Cutler. Our lunchtime presentation today will begin with Lawrence Tabus, the chairman of the Pennsylvania Republican State Committee, followed by a panel presentation that will be moderated by Jeffrey Lord. But right now, we want to go to Ashley Klingensmith, and Ashley is the Pennsylvania State Director of Americans for Prosperity Pennsylvania. She previously held staff positions with the state Senate and also with Congressman Keith Rothfus. The topic of discussion today is going to be the upcoming state budget. And the title of our presentation is Competitive, Simple, and Fair, the Trifecta for Comprehensive Tax Reform. Here with the panel is Ashley Klingensmith.
Lohman, thank you so much. Thank you for having me. It is wonderful to see everyone, albeit virtually. Yes, I serve as State Director with Americans for Prosperity Pennsylvania. And you know, we are committed to working with anyone to do good, to break down the government-erected barriers that are keeping folks from realizing their version of the American dream, whatever that unique version is. And so we work with folks who are closest to the problems, right, in their communities. We work with the grassroots, and we equip them and we empower them to really be change agents in the policy conversations that are happening. And so we believe that we have certainly identified a problem, and that is, you know, Pennsylvania's economic climate and our kind of onerous tax burdens that we face here. But we also think there is a solution in comprehensive tax reform, a bold policy solution. We think that's just what we need. You know, almost a year ago, last October, we held a lobby day with activists from across the Commonwealth, and we visited a lot of members and just started to talk about principles that we believe could guide their decision-making in getting to a really good comprehensive tax reform product. And so we've been talking about three different principles. First, competitiveness. Look, Pennsylvania has the third highest corporate tax rate in the nation. That makes us less competitive. We can do better. We need to do better. Second, we've been talking about simplicity. We've been saying that Pennsylvania needs to eliminate kind of our outdated income classification system, and that we also need to simplify all of the different taxing authorities that we have. And finally, third, fairness. Pennsylvania gives away hundreds of millions in corporate welfare annually, and it's something that we think we've got to address. Let's eliminate tax credits in favor of lowering the overall rates. So I am elated to talk about, you know, some of what that looks like today with a great group of panelists. We have Jonathan Williams joining us from ALEC. We have Representative Greg Rothman joining us, and we have Mr. Douglas Henry joining us. And I am going to give each of them a more robust introduction when we get to them. But I just want to set the stage a bit. You know, North American Moving Services every year issues a migration report. And for the past 2 years, Pennsylvania has been listed as the top 5 outbound migration states, in the top 5. And the number one reason listed was a desire for people to leave for more tax-friendly states. Kiplinger lists us as 7th least friendly state in the nation. You know I'm the last man standing in my family. My mother went to Tennessee, my dad went to Ohio, my aunt went to Delaware, and all were principally driven to those places for better economic climates. I want to share something that Troy, an entrepreneur from York County, told me last December. He said, I've been interested in real estate investments and business ventures for about a decade. After I purchased my last commercial property for my main business to occupy, I started looking for more investment property. As I explored my options, it became clear that selling my single occupant light industrial property to free up capital would probably be in my best interest. And as my budget grew, both my realtor and my accountant asked me why I was looking at property in Pennsylvania. My realtor is a friend, and my accountant prefers that I make good investments, and they both recommended that I look to other states. You know, Troy's story is not unique. There's a lot of those all across the state. And look, to keep people like Troy and attract new businesses and new families to Pennsylvania, we've got to start expanding our workforce and bench of businesses. And so we should consider bold, transformative policy like comprehensive tax reform. It has paid dividends in states like North Carolina, who was actually in that North American Moving Services report listed in the top inbound migration states, and that can largely be attributed to the attention they have paid to comprehensive tax reform. They were a state that was ranked 21st in the Rich States, Poor States Index in 2010, and just a decade later ranked 5th in that same index. They took kind of a piecemeal approach to tax reform, slowly phasing in phases over about 6 years, starting in 2013. On that same index, Pennsylvania ranks 39th. You know, Representative Seth Grove recently told me, broad-based tax reform is full of political minds, Ashley, but sometimes you need to just say, damn the torpedoes, full speed ahead. And so I am so excited to welcome Jonathan Williams, the Chief Economist and Vice President for the Center of State Fiscal Reform at the American Legislative Exchange Council, where he works with state policymakers, congressional leaders, and members of the private sector to develop fiscal policy solutions for the states. He co-authors that study I just cited, Rich States, Poor States, the Alec Laffer Economic State Competitive Index, with Reagan economists Dr. Art Laffer and Stephen Moore. Jonathan regularly travels more than 100,000 miles a year, having visited all 50 states. So he is really the perfect panelist to share some perspective on what states from across the nation have done. So Jonathan, welcome. The floor is yours. Would love to know kind of how tax reform has taken shape in some other states and how you see Pennsylvania starting to make headway on this issue.
Well, thank you, Ashley, and greetings from the land of make-believe here in Washington, D.C., as I often say. I wish I could be with you in person, but give my best to everyone. And I'm glad to hear you're taking up this topic because it's such an important topic for the future of Pennsylvania. And as I travel to 50 states, maybe less physically this year, unfortunately, than usual, but still in touch with our state policymakers all across the country. I know we're grappling with some difficult economic and budgetary times. And certainly the states that did, I think, over the top, overly aggressive lockdowns of their economies without concern for people's livelihoods in many cases. And unfortunately, I know your governor was among those that took some of the most extreme approaches. Those states are seeing some of the most difficult budget challenges they had, where other states that had good tax policy and competitiveness in their economies beforehand and resisted some of the over-the-top calls to shut down people's livelihoods, those states are actually going to come out of this in relatively good shape. Another kind of interesting takeaway as it relates to tax reform, and I'd like to talk a little bit about that North Carolina example that you mentioned, because that I think is the gold standard for tax reform over the last decade across the states that we've tracked it. But one of the other interesting things is we just got numbers from the government on this federally, and we see that the states that overly rely on income taxes, whether they be business income taxes or personal income taxes, any capital-based tax, those states are seeing the biggest revenue downturns. And this is not a surprise. We've followed this for decades, and we see exactly that play out. And it's not just good for economic growth and the growth of livelihoods of individuals and businesses to get tax rates down, especially on income taxes. It actually is healthy for crafting a reliable state budget as well. And so the states that are in the biggest crisis mode right now shouldn't be surprised. California, New York, New Jersey, states like that overly rely on income taxes. But the North Carolina example is a really important one. They were a state that had a tax code that was really littered with special favoritism, high tax rates, and unfortunately, I guess in the case of pro-growth tax reform, they had a leadership of that state for more than 100 years that was run by one party, and that allowed it to get littered with lots of special favorites in the code. And what I think when Speaker Tom Tillis, who sat on our ALEC Board of Directors, now U.S. Senator Tom Tillis from North Carolina, when he took the majority, and they had some great legislators and they had an executive branch partner there in Governor Pat McCrory, they took a look at the tax code and said, we need to do better. And they reduced rates on individuals, on businesses. And I often pose this as a question for legislators in other states. The corporate income tax, which I know is one of the very highest in Pennsylvania, and we'll be talking more about that on today's panel, is a huge inhibitor to job creation in the Commonwealth. In North Carolina, their corporate income tax rate now is 2.5%, the lowest of any state in America that levies a corporate income tax. So they went from above average corporate income tax rate to now the lowest in America of a state that has one. They also reduced income taxes on individuals and went to a flat tax. Of course, Pennsylvania's taken advantage of that for many years on the individual side. North Carolina also importantly killed the death tax, which is something that is not only bad tax policy, but I think fundamentally unfair and violates that important principle actually that you talked about of fairness. It's something that drives apart family businesses and farms, and that's something that North Carolina did away with. Now, how did they get there? How did they have the revenue to do it? First of all, they took advantage of the concept of the Laffer curve, which is when you cut taxes, you get more economic activity. They've had hundreds of thousands of new taxpayers vote with their feet, as we say, from high tax states into a state like North Carolina, and they've seen the revenue effects in a way. They've kept surplus dollars. They were able to put away billions in rainy day funds, their unemployment insurance funds, things that are coming in very handy right now, of course, in this pandemic and this budget situation that we're in. But they also took away some of the special favoritism in the tax code. And I think that's a key aspect that we've seen play out successfully in so many other states that have done tax reform well. I think I would also add in the region, Indiana, starting under Governor Mitch Daniels and then Governor Mike Pence, of course, also took this incremental approach to buy down individual and corporate tax rates to become more competitive. And they did through spending prioritization and making sure that they weren't taking advantage of hardworking taxpayers' dollars and overspending. And they used that as really the way of buying down rates and becoming more competitive over time. So those are two, I think, of the most exciting that we've seen. Both of those states went from middle of the pack in rich states, poor states, now to the top 5 of our ranking. And I think they both provide really tangible pathways that Pennsylvania could follow to get out from nearly the bottom 10 in our ranking and become one of those states that is a turnaround state that is creating jobs. And you turn around this horrible problem of out-migration, because people don't go to places that are uncompetitive, and in many cases they don't stay in states, whether they like the state, whether they have family in the state. You can only keep them there so long if your policies are bad and you don't have the job creation to do so. So those are a few of my opening thoughts, Ashley, but I really appreciate the opportunity to be on this panel. There's so many great stories from these 50 laboratories of democracy that we have, and it's so important that states continue to make these decisions on their own. This idea of a federal bailout of states and the federal government coming in and taking away this decision making is exactly the wrong approach. States need to govern themselves, and they need to have the ability to innovate and create policies that differentiate themselves. And of course, we see that every year in the states that are being more competitive and cutting taxes and being positive for taxpayers and families.
Absolutely. Jonathan, thank you so much. I look forward to seeing folks like Representative Rothman, passing legislation, and then we can start ascending the ranks of your index, and we look forward to being cited amongst your success stories. So thank you so much. I am thrilled to have the perspective of a business owner here in the Commonwealth. Just share kind of what our tax climate has done with respect to him thinking thinking about expanding, thinking about opening up additional locations, maybe where that has sent him. But Mr. Henry has concentrated most of his recent professional activities as a multiple plant manufacturing CEO. His company is Henry Molded Products Incorporated. These endeavors have led to interest in sustainable applications for packaging, horticulture, recycled solid waste industry development, and custom products. Everything is produced from 100% recycled paper fiber, which punctuates a positive environmental profile. Before assuming the helm of his company, he spent a number of years as a business operational consultant. This often pertained to business development and venture management, which continues to be an ongoing involvement. A former member of the Federal Reserve and a former member of the Federal Reserve's Business Council Board, and he now serves on the National Board of NFIB. So, Mr. Henry, welcome, first of all, and I would just value hearing kind of the impact from your optics and the seat from which you sit of our high corporate net income tax rate, what the code being fraught with hundreds of millions in corporate welfare kind of has meant to you. But thank you so much for just sharing.
Well, good morning, Ashley. Thanks for including me. Our perspective is one that's echoed throughout the independent business community throughout the country, not to mention Pennsylvania. But we all know about Pennsylvania's manufacturing heritage, and we're a card-carrying case study. We're 56 years young, having been headquartered here just that long, another plant down in South Carolina, and another over in operation in the UK. I mean, I can personally testify those tantalizing and tempting inducements from other states with differential advantages on the tax front and just in terms of business-friendly hospitality are many and vast. And I can tell you that even our friends down in South Carolina, there's some substantial differential advantages looking at the two states. However, Pennsylvania's strategic location, not to mention our heritage here, certainly gives it many trade-off advantages. Corporate net income tax differential is huge, but resources are really what's our biggest challenge, especially in today's environment. How did we manage to grow and grow very aggressively in the last couple of years? Well, it was enlightened tax policy, both federally, but not so much here in our own backyard. We got to increase our capacity over 20% since 2018 with the Tax Reform Act, coupled with some of the enhancements that came through with the depreciation enhancements and what we need to do for sure, because it works. It's been demonstrated to work in these last 2 years throughout the country, not to mention here in Pennsylvania, and using those approaches will grow our own backyard industries, which I fervently believe we need to focus on. I'm all for recruitment for new businesses, but let's pay attention to those companies that need market and financial assistance and foundational support in our own backyard. So that's just a piece of where I'm coming from. We can attack both of those things at the same time with an enlightened integrated tax reform act.
Absolutely. Thank you so much for being here. And before I head to and introduce Representative Greg Rothman, who has so kindly agreed to sit in for the now majority leader, Representative Kerry Benninghoff, I want to read something that he sent me. And these are in our now leader's words, who has really spearheaded the discussion, I think, under the dome about comprehensive tax reform. With Pennsylvania suffering from a historic budget shortfall because of the governor's far-reaching and devastating economic shutdown, PA must look at all possible solutions to balance its budget without raising taxes. One area of focus must be an overhaul of our state's tax structure. 2 years ago, I had a report commissioned from the Tax Foundation to look at PA's overall tax structure, and the recommendations from that report were clear. PA's current tax structure is outdated, complex, and cumbersome, and certainly less than competitive in the global marketplace. PA's tax structure needs a significant overhaul. A complete revamping of our tax structure is something I absolutely support because it just makes sense, even more so with today's challenges. At a time when PA is in desperate need of economic development, additional investment, and a competitive advantage to attract new economic opportunities, our antiquated tax structure should not stand in the way. The only way to permanently solve the problems facing PA is to grow our economy. To do that, we need a modern, responsive tax structure that is reliable and predictable, that benefits working people, and is welcoming to employers and new investment. If we want to foster a booming economy in PA, we need to be open to implementing holistic changes. I, like all of you, want PA to be a COVID-19 recovery success story. Now more than ever is the time for our caucus to be on the offensive with positive issues that benefit everyday working Pennsylvanians. We need to have a vision for the future and a recovery plan that works for all Pennsylvanians. Tax reform is a great place to start. So Representative, welcome. Representative Greg Rothman represents the 87th Legislative District, which covers part of Cumberland County, indeed where we are sitting right now. He served our nation in the Marine Corps and the Marine Corps Reserves. He founded RSR Realtors, which grew to be one of the nation's largest real estate firms, one of the region's largest real estate firms. As a small business owner, he knows how out of control spending and higher taxes negatively impact our employers. His service both to our nation in the Marines and in the business sector led the President of the United States to appoint him to the National Veterans Business Development Corporation Board to encourage veterans to start entrepreneurial ventures. So welcome, Representative. I would love to hear from you how can Pennsylvania achieve tax reform? What does that look like? What are some of the key indicators of progress? And what can the grassroots do to help you guys achieve this?
Thank you. Yeah, and I'm a member of the Appropriations Committee, so we're trying to deal with a $5 billion deficit. But let's go back to what Dr. Laffer said about lowering tax rates. You know, when Reagan cut the tax rates, the Kemp-Roth tax cuts, and I actually worked for Jack Kemp, the revenues to the federal government doubled over a course of 8 years. And Jack Kemp, late in his life, said to me, we made a mistake by saying we want to cut taxes because that scares the people who benefit from the taxes, which are services and infrastructure. We want to cut tax rates, and actually cutting tax rates increases revenues. So Jonathan mentioned Indiana and North Carolina. I have a very good friend who's got a huge plasma company, and they're looking to relocate. He's from Pennsylvania. They're looking at Indiana and North Carolina. I said, not Pennsylvania? No, we have a corporate net income tax. It's 9.99%. And I've introduced a bill to lower it to 3.07. After hearing about North Carolina, I'm thinking about making it 2.07. If in anywhere else in a free market, I mean, you think about it, the people came to me who wanted to stop smoking. They said, let's raise the taxes on cigarettes so we get people to stop smoking. Well, why do we want to raise taxes on production and get less of it? We want to cut the tax rates and create more revenue. And I also have the bill to eliminate the death tax, which is insidious and is unfair. And it affects the first dollar of that person, grandparent who dies and wants to leave something to their grandkids. The first dollar is affected in Pennsylvania. And it has real effects on our revenues, because I have constituents who have moved to North Carolina or have moved to Florida because they don't want to pay the inheritance tax when they die. And they still have 20 years of productive life left in them. So it's about fairness, of course, but as an appropriator now, we want to create the revenues so that we have a budget that we can provide the services that people expect.
So I know there's a lot of folks watching right now who consider themselves to be grassroots activists and advocates. What is the most helpful thing today, right now, as we head into this budget conversation? Obviously, we passed a 6-month kind of stopgap. What can folks do right now to help kind of drive this conversation with their members?
Yeah, so I got to make a pitch. We have an election coming up in 38 days, not that anybody's counting, and we need Republicans. I mean, there are very few, if any, Democrats in the legislature that have any small business experience, that have any free market experience, who understand how the free market works. And I was telling my wife this morning, like, if you asked a Democrat in the House what 1 + 1 is, they'd start arguing about whether or not even 1 and 1 want to get together, and who, you know, who's making them get together, and what's the, like, there isn't any even understanding of how the economy works. And that's why what the governor did when he started shutting down businesses and deciding which were essential and not essential, it became such a disaster with people becoming unemployed, and that our unemployment system doesn't work, because he didn't understand the supply chain. And the worst story to me was they shut down all the laundromats. And I called the governor's office and said, you can't shut down laundromats. Well, why not? We're in an epidemic which has to do with, you know, you want to clean stuff, people go to laundromats, and they thought only college students went to laundromats. So, so grassroots activists should get to know their legislator. They should get involved in these elections coming up, and they should talk to the policymakers about how tax reform affects them.
Yes. Okay. So everything has changed, right? And everything is different now in light of the pandemic. The IFO, I think you just mentioned, has estimated we are going to lose about $5 billion here in Pennsylvania in revenue by next June. We have to have transformative, big, bold ideas that are instituted. And so at AFP, we always want to give you the ability to make your voice heard in as efficient a way as possible. And so our call to action today for everyone watching, please visit AmericansForProsperity.ivolunteers, and that's plural, ivolunteers.com, and I want you all to search for the following action. It says 3 principles with which to fix the tax code. And that is a letter. It'll take you under a minute to sign, and it will be sent to both your member of the State House and member of the State Senate. And look, you heard that maybe sometimes this has traditionally kind of lived in maybe a partisan space, but everything is different now, and we are facing unprecedented challenges. And so perhaps we are going to be able to have conversations with members that we previously did not think was possible. And so we look forward to doing that. We're going to continue those conversations under the dome in district offices, continue to engage folks like Troy from York and Mr. Henry from Lebanon, and we need all of your help as well. We have got to apply pressure to do something big this year, because we have faced something big. And so it has been a real pleasure. I thank Lohman Henry at PLC for having us. And again, I want to implore everyone, visit AmericansForProsperity.ivolunteers.com. You can go ahead and just search 3 principles with which to fix the tax code. That will generate a letter that you just simply can sign, and it'll shoot to both the inboxes of your state house member and your state senator. And we need them to kind of hear from you now more than ever. And so couldn't be more grateful for Mr. Henry from Representative Rothman. Jonathan, thank you so much for joining us virtually. It was a pleasure to see you, and we look forward to talking with everyone watching in the very near future.